Thank you for the introduction, and it's refreshing to be speaking with individuals that know Eurasia. Of course, being in Canada, it's an education piece on a daily basis, and given the audience here understands Eurasia, it is rather refreshing. So thank you for that introduction. And let's talk about Ion Energy. It's a company that I co-founded in 2017 to look for lithium in Mongolia. Probably news to most that it does in fact exist there. And so we'll talk about what we've done thus far and how we intend on expanding our operations and footprint for this clean green metal that's required for the transition. Typical disclaimers, given we do trade on various exchanges, we need to include that in our information. I'll touch on the team. I think the bios for every speaker are in the materials that you've received, but I think it's important for me to highlight the other members of my team. So I co-founded the company in 2017 alongside Matthew Wood, my chairman. Matthew Wood is a serial mining entrepreneur, a Rio Tinto gold scholar that's been in the industry for quite some time with various exits around the world, more importantly a large one in Mongolia that we'll touch on quite briefly here. Wendy Lee manages our strategic relationships in Asia. Of course, being in the region, it's important that we have those relationships to help develop potential offtake or investment partners in the region. Half our board is Mongolian, so that consists of Batatu Morochir and Engtushin Kishiksurin, both of which have been in the mining industry for a number of years, if not decades. And then Anil Varach, he's based out of Toronto. He's more our investment banking professional that helps provide the necessary guidance on capital that comes into the company. But I'd like to highlight the 5 individuals at the bottom of the slide there that are truly the lithium experts that we brought on board when we founded the team, or we founded the company, well before we had an asset. And that includes Paul Fornazzari, the original chairman of Lithium Americas. He was also founding director of Lithium, which we may or may not know, sold to Zijin last year for $960 million. He's also the head of the LATAM Global Mining Group for Fasken, a major law firm, not to talk ill of Norton here. And then Don Haynes, a gentleman that has worked on lithium assets around the world. But the importance of Don Haynes is the fact that he understands clays, evaporites, brines, and hard rock. So very much a well-rounded lithium expert. Dr. Hashbat Dashtetseren is our in-country sort of PhD hydrogeologist, and he ensures that Don's instructions are carried out. Dr. Mark King, the qualified person on file when Lithium sold to Zijin last year, also one of the first people to write a 43-101 for lithium in Canada. An advisor of ours as well. And then last but not least, Dr. David Deek, an individual that is an ex-Lithium Americas and Tesla alumni, where he helped build the supply chains required for Gigafactory 1. So we assembled a strong team, and hopefully that's reflected there. Now a bit about Mongolia. Most of us in this room know it a fair bit. Of course, it's 1.5 million square kilometers, 3.5 million people in terms of population, vastly underexplored. We saw value in Mongolia back in 2009, or my chairman did, when he started a company called Hunu. We'll talk to that in a second. But in 2016, when I visited the country, I sort of looked at my chairman and we said, well, Mongolia sits in the Great Asian Indo-Arctic Basin, which means the geology of the regions is very similar to that of LATAM, or the Lithium Triangle. And so we set out on the task of looking for lithium in country, and we believe it has an untapped potential for lithium exploration, as well as other minerals for the clean green energy revolution. The economy continues to climb and accelerate. I was there last year, I beg your pardon, last week, and I spent about 5 days in country having various conversations. I think I've been going there since 2016, about 12 visits thus far. And each time I visit Mongolia, I'm seeing more and more foreign investment come in. So, you meet new people at the hotel. The British Embassy there had an event whereby they had a number of individuals coming from the US, from India, from Japan, talking about why Mongolia is an exciting place to be. Geopolitically, it of course is sandwiched by China and Russia. That makes it an interesting place, to say the least. But the good thing about Mongolia and where its stance is, it is neutral. So it is holding a stance of neutrality. It does not look to engage in the conflict. And importantly, Western powers that be see it as the ideal buffer zone between these two vast eastern nations. And so it is vastly supported, or heavily supported, I should say, by the Koreans, by the Japanese, by the Germans, the US, the Indians, etc. So it does remain rather as a buffer zone, if you will. The revival policy and of course the energy environment in Mongolia today, having met with members of government in the Ministry of Mining, it is evident to us that lithium and other such elements are being deemed critical, and so they're happy to see the support of various investors from outside the country to help develop those resources. We've seen Rio Tinto, which the deal didn't go through, but they were looking to buy out Turquoise Hill. That basically validates an additional $5 billion worth of investment in Mongolia, telling us and telling everybody that the majors are interested in Mongolia and it remains a jurisdiction that should be explored. In terms of Chinese investment in Mongolia, I would touch on the fact that Zijin earlier this year invested in a company called Xanadu Mining, which is a copper explorer in Mongolia. It's sort of the first time a Chinese company has been able to publicly announce investment in China. The Prime Minister of Mongolia has spent a number of visits to China this year, purely to develop those relationships and help bring in Chinese capital or other Asian capital to help develop assets in country. So we've been in Mongolia for over a decade as a team, about 13 years. I've been with the group for about 6 of those years. We have a combined 150 years worth of mining experience amongst us. We have Mongolian nationals, and I think it's important that you have local board members irrespective of jurisdiction. We have partnerships with various levels of government, and we are working with the University of Science and Technology to help better understand the hydrogeological processes and principles that would be required for our assets to go into production. I mentioned we were there in 2010. That was a $20 million IPO, a company named Hunu Coal with no assets out of the ASX. Some assets were acquired. It was an 18-month exit with 300 employees and 3 expats. So that again tells you that Mongolia has the necessary skilled labor to develop any mining asset. A $500 million exit 18 months later. We re-entered sort of Mongolia back in 2016 as a group, where we acquired Altan Saganovo from Centerra Gold in Dornod province. That was an IPO in 2018 that ultimately went to first gold pour in 2020 using 100% Mongolian staff. Today Steppe Gold employs 350 people and only has 1 expat, with plans to expand to about 700 people for phase 2 operations. In 2020, Ion Energy went public on the TSX with a goal of acquiring or developing our flagship license, Bavayol, which we'll touch on in a second, but ultimately to be the first mover in the lithium space and allow us to explore Mongolia for that potential resource. Our flagship license is Bavayol. It's 81,000 hectares, so for a sense of scale, that's about 60 kilometers wide, 20 kilometers tall in its largest area. One of the largest land packages ever granted to a public or private entity by the government of Mongolia. It's located 23 kilometers from the Chinese border in Supplier province. And the early results that we found on the asset were very minimal in terms of the actual exploration work that was done, but it gave us promise to say that there may be additional capacity here for us to explore. So the average grade seen was 426 ppm. The maximum grade seen in the auger program was 811 ppm. It sits in Sukhothai province, so very close to the Gobi, of course. 250 days of sunshine, very high winds, so you would be able to power it with carbon neutral sources should you choose to bring it to production, or should we choose to bring it to production. The chemical makeup of the asset currently is one with low potassium, magnesium, calcium, sodium, and boron ratios, thereby making it feasible for ultimate production. And we know the aquifers are rather low. So I mentioned we went public in August 2020. Mongolia was closed to foreigners or any sort of visits until about earlier this year. And so Bavayol is the asset we went public on, but we hadn't had the ability to do much work that would mirror the type of work that you would do in LATAM or any other lithium region. We did 222 auger holes across the entire asset, covering about 70% of the landmass. We found grades of up to 1,502 ppm lithium at about 12 meters below surface. We've called that White Wolf, or our White Wolf prospect. But in the midst of all the exploration that we were doing on Bavayol, we also managed to acquire an additional license, the Urgakhnaren. But on this massive license that we're seeing here, as I mentioned, roughly 5 times the size of the city of Vancouver, we also found some very significant copper and nickel anomalies on surface. And we'll touch on that in just a second. So Urgakhnaren is an asset we acquired early last year. It is a true basin, if you will. It's 29,000 hectares. The basin covers around 17,000 hectares. It is fault bound, so very similar to what you would expect to see in say, Argentina, Chile, or Bolivia. And it was an asset that was rather exciting to us. Early days when we acquired the asset without traveling to country, the Google satellite images essentially showed this asset as a green landmass. So not what you would expect where to find lithium. But it turns out that Google image photo was taken at the end of August, just past the rainy season, and where it rains for 2 weeks a year. But anyway, we'll show you a couple more images just to present how much of a salar it truly looks like. That's the salar back in April. I managed to get out there with Don Haynes and Dr. Mark King to essentially review a rather significant exploration program that we had undertook. It included a number of auger holes, 83 to be precise. It included TEM, or so a geophysics program, to better understand what's beneath the surface. And when we were out there, we were able to collect brine on surface in one of the natural evaporation ponds, and the grade there was 918 milligrams per liter. 918 milligrams per liter is significant, irrespective of jurisdiction or wherever you may be looking at brine, but I should add the caveat that it is on surface, it is in a natural evaporation pond, and so we're not expecting the brine below surface to be as of high grade, but 918 on surface was significant enough for us to expand on that program using TEM geophysics. We did 82 line kilometers to commence with. We found resistivity between 0.2 and 500 ohm. The sort of magic number there with respect to TEM numbers when you're trying to look for brine either below or on surface is around 7 ohm or below. And we found, yeah, there it is, okay. So that's our drilling on site, and I think we may have excluded a slide for this presentation to keep it brief. But if you look at the 8 lines there in the low resistivity zone, we did an additional 9th line that was about 16 kilometers long, ultimately giving us 100 line kilometers of TEM geophysics. That gave us a low resistivity zone at half an ohm at 9.9 billion cubic meters. Why that number is significant, I'll touch on in just a second. And at 6.5 ohm, we had 22.7 billion cubic meters. So generally speaking, for a lithium asset to go to production in the brine space, to justify the capex, you want 10 million ton LCE. That generally is the number that you're looking at in order to justify the capex. At 9.9 billion cubic meters, if the average grade, and I'm not saying it is because we don't know this yet, we're still in the midst of the work, being 100 milligrams per liter, we have 10 million ton LCE. If the grade is higher, of course, we would be in a better position, and that is yet to be determined. We continue to drill, and we've now completed 3 diamond core holes on this asset, 2.5 water well holes as well, down to 300 meters. We're receiving our assay results over the course of the coming weeks, and they will be released to market. But the visit we concluded in October essentially just shows you where our drill results are, and that sort of pink and purple area is the low resistivity zone, essentially in the center of our basin. But exciting times for us today. I think we're still an early stage exploration company, but the team we've assembled alongside what we're seeing on the ground is rather encouraging. So I mentioned we found a copper and nickel anomaly on our asset, and why that's important. We entered into a joint venture agreement with a company by the name of Orangian Resources, also in Mongolia. It made sense for the 2 companies to come together because copper, nickel, and lithium, of course, are all required for this transition. The zones that we found within our licenses show rather significant copper-nickel anomalies, but importantly, Orangian will be financing or funding the exploration of those anomalies given the scale of the license, and Ion Energy gets a 20% carried interest on any copper-nickel found on our assets as well. As a company today, 60 million shares outstanding, so a rather tight structure. Management and insiders hold 25% of the company. We continue to escrow ourselves, and we, of course, want to align ourselves alongside our shareholders. We have Mongolian investors that have physically invested for up to 9% of the company. Family offices, London, New York, Zurich, a fair bit of investment there as well. We have investment from the Broma family, the Lundins, as well as Ixios Asset Management out of Paris, so to talk about some of the investors in the European region. But a significant number of institutional investors that continue to hold their position in the organization as well. We completed a bought deal last year at 50 cents a unit with a 70-cent warrant. That, as of November 24th, I believe we're trading about 19 cents, so that has come down significantly. But I think that has a lot to do with the fact that a lot of our peers in jurisdictions such as Argentina, Chile, and Bolivia had the necessary skill set in country to advance their assets, while we were sort of sitting on our hands, getting keen to get out to Mongolia to advance ours. So we're about 12 months behind the vast majority of our peers, is our view. We've continually done what we've said, and we do what we say. We've had a rather aggressive sort of trajectory since having started the company, but of course since having gone public. We're looking to get an inferred resource on Urgap-Naran in the first quarter of next year. Would have hoped to get it this year, but of course with some delays, we're pushing off onto next quarter. And that is rather quick for any asset around the world, considering we only had access to it in March this year. To bring it to inferred resources is a rather commendable feat. Measured and indicated on that asset as well in the second quarter of next year, and then ultimately we would look at some strategic relationships and partnerships with respect to the development of our assets. One thing I want to touch on that I see here, the slide's not in there again, but one thing I would like to touch on is the ESG mandate. I think it's important that the ESG is what's considered widely or a buzzword in today's world, whereas that's the way that we've operated since inception and since having started various organizations in Mongolia. From an environmental perspective, I think evaporation ponds that are being used in LATAM are not environmentally friendly, and that's obvious as a result of the water that gets evaporated from the water table and the depletion of that said water table. We're working with various DLE partners, so direct lithium extraction partners, to evaluate their technology for the ultimate bringing of these assets to production. That would allow you to between 90 to 95% of the water back into the water table, so a rather constructive way to do so. From a social license perspective, I think I touched on the fact that we employ a number of Mongolians. In fact, 99% of any other venture that we've had in the country have been Mongolians. We have social licenses in every jurisdiction that we operate in. And we continue to get approval and also interest in terms of individuals joining the organization in their specific regions. And of course, being a publicly traded company, governance is something that we have to adhere to and continues to be part of our framework. So one of our advantages, of course, proximity to China, being the largest consumer of lithium on the planet, but let's not forget Korea, Taiwan, Japan, all major consumers alongside India as well. They're all catching up. Our valuations there just show you that we are accelerating in terms of, or rather we are undervalued relative to our peers. The map on the right there, I'd just like to touch on very quickly, given we don't have a proximity play, we don't have somebody beside us that's already had a resource calculation completed, we don't get the same sort of valuation that perhaps somebody that operates in the Atacama that has yet to drill a hole is trading at about 130 million market cap. So just wanted to touch on that quite quickly. And that's the presentation in a nutshell. I will be around, of course, if anybody has any questions after this, but thank you very much for your time, and thank you all.